All right, you guys, welcome. Doug McKay on the 20th of January, antiwallstreetguy.com. Closed at 1350 on the S&P. Looking at a daily chart, did get the close this week above 1300. And when we open this up to a weekly chart, you can see we put out a post on the 17th saying that we were still capped by 1300, but we are above 1300. We do think that the market here is obviously overbought, but it could continue to be overbought. However, we do think, even though the trend is long, or has been long since the 23rd of December, the way we have it, that we'll see a little back and fill soon, and we'll be able to get better prices than what the S&P closed at today. But nonetheless, price is truth, and the bottom line is the trend is intact and it looks good above all major moving averages. Little light on volume, so we'll see what happens next week. But the trend, for the record, for the fifth Saturday in a row, is long on equities. A couple things going on this week. If we go back to a daily chart, when we take a look at treasuries, specifically ETFs tied to treasuries, this is a chart that we put out a couple days ago on the 18th, where the trend was still intact. We actually were looking at this candle on that day, where the odds increased if we were to break above the double top of basically 106.20 on the IEF. Since then, we have broken the trend line. We have also broken down below the 30-day and the 50-day moving averages. So we see the trend right now as having decoupled between bonds and equities, whereas the last 3 weeks they were moving together. We thought maybe equities would give way first, bonds would continue to break out. But just the opposite has happened. So be cautious if you own anything tied to treasuries at this time. As far as the managed accounts go, we have not been in treasuries in probably three or 4 weeks. Nor do we see a reason to get back in at this time unless we got to close above 106.20 or we were playing some type of bounce in here. You never know if this is a top. When we look at the NASDAQ 100, great looking chart, long term, short term. Do I think we'll probably base sideways here and pull in a little bit? Yes, I do. But provided we hold that 57.50 level, this looks like a very decent chart for the NAS. Off a little bit today because of Google. But the Dow was up because of IBM. I think maybe 55 points were attributed to IBM and Microsoft and Intel. The semis look good, SMH. This is a chart of Microsoft. We put out this blog on the 15th. And I believe that was Martin Luther King Day. Monday I put this up where I saw that this was a bull flag due to this. And then obviously today was a big day with big volume. So that's a nice looking chart. Apple, we reduced our position by 50%. Why did we do that? This could be kind of a bull trap here. This little move up above this candle. Is it unusual for this to come down? No, because we have this gap here. We do have earnings next week. Let's say things go well and it doesn't gap up. It looks good again above 432. If it gaps down, we're going to be watching 405 to hold. But for right now, ahead of earnings and the fact that we're starting to break down here a little bit on Apple, we took half that position off today. No reason to give it all back. When we take a look, we talked about bonds, but let's take a look at the 10-year yield itself. And last week, the week before, we were making a case for these lows possibly being tested on the 10. That does not have to happen. It may not happen. Then again, it may happen. But the bottom line is we want to trade what we see. We want to react and not try to rationalize it. But this is a break above the 50-day and above resistance in here. Therefore, that has affected the TLT and obviously the IEF, which we just showed. And we therefore, again, see the trend in treasuries at this time is down. Let's take a look at gold, GLD. I think we're still just below the 50-day moving average. A lot of overhead supply still. This is a daily chart, so you're not seeing all the supply on a weekly chart. We've been talking about this gap for the longest time. We're getting close to filling that gap. But boy, there's a long way to go for gold GLD to put in new highs. So we still want to be cautious there. Basically, anything we would be looking at this time would be for a trade. Let's talk about the dollar. We exited the dollar position today. You know, we were talking about support at 22.25 on UUP. It's still there. It's still above the 50-day. But we're kind of trading this off the 30-day moving average and a trend line. And therefore, we broke below that the last couple days. We thought maybe we'd get a little bit of a bounce today. We did, so we sold that into the bounce. And that's pretty much it, you guys. S&P 500, the overall trend is long for the fifth Saturday in a row. We'll see what happens next week. We have a little cash. We think we're going to be able to buy in at lower prices here. Probably we would be watching maybe 1270. We'd sit up in our seat. 1250 for sure. We would be exiting the S&P 500 and getting short. All right, that's it, you guys. As always, thanks for the blog. Thanks for listening to the show. We'll see you next week. Thanks.